Alright, hope everyone's doing well. So let's see here. So here's today. We had there we go. Sorry about that. Anyways, so we had a gap up on the open and a little bit of parabolic wedge. And if you were in Al's trading room earlier during the questions at the end of the day, you heard Al explain parabolic wedge is consecutive biclimaxes. If you think about it, biclimax, another biclimax, another biclimax. So, I'm sure he explains more of it in his new course when more and more gets released. But in essence, to keep it really, really simple, because, it's kind of neat, he gave he was talking about parabolas, calculus and whatnot. But to keep it simple, what he was saying is when you're drawing trend lines, a parabolic move, the trend line gets steeper. So in essence, you draw the trend line here, then you try and draw it, then you draw it again here. So you can see if it kept doing that, it would start to form a parabola. So anyways, it's consecutive biclimaxes, and a lot of bulls will step aside and wait to buy. And plus, look at the first 60-minute bar. Here's the 9:30 close. Rather disappointing sell-off. And if we look at the first 60-minute chart. Here's the close. So pretty big tail compared to the first bar and a big gap up. So probably sideways more likely. So at this point, let's take always in. Clearly always in long. By this point, clearly always in long. You may go leg 1, leg 2, but it's a parabolic move, so you may go sideways. The bears got a pretty good sell-off into the close of first 60-minute bar. And at some point, price starts to go sideways for a while. And arguably a triangle, 1, 2, 3, 1, 2, 3. It's a horizontal wedge. And at some point, you got to say, okay, maybe it's always in short. What do you do? Maybe the bulls get out and they, aggressive bears sell. But it's really difficult. And the reason it's difficult is this blue line is technically where the stop for the bulls is. Where the stop for the bulls is. So if you think about it, look where you are. Just take away this parabolic nature, and you got a lot of bulls saying, okay, I bought up in here, maybe I bought this high close. So right now it's a 50% pullback from the entire move. Maybe a 50% move pullback from this close, or wherever. So a lot of bulls are saying, okay, if I buy here and put my stop down here, target up here, the map's getting better for the bulls. A lot of bulls will say, okay, you know what? Maybe we'll test up here, and I bought up here, or maybe I bought down here. As long as price doesn't stop me out and fall below here, I'll add on above the bull bar. And when traders do that, they typically want to do that when, price is 2 to 3 times the smallest scalp. So in other words, when price is 2 or 3, at least 3 points away from their entry, preferably, but sometimes that's not always the case. And, a lot of bear bars down, probably sellers above, no real good buy signals. Here, not a great buy. So it's kind of one of those, a lot of bears will get out, some aggressive bulls will buy, but it's very difficult to do that. And then you get a low too short, you got to be think about it this way. You have a second entry short, and think about the market cycle. Are we in a spiking channel, which we're probably not? We may test up to here, but then again, we've been going sideways for the past 9:05 to well over 3 hours. So, if I'm correct on my math, we've been going sideways for around 40 bars. Maybe a little more, maybe a little less. So if that's the case, we're probably in a trading range, possibly a bear channel, which means possibly a bear trend and endless pullback. So I think definitely you know, bears probably always, bulls probably get out, bears probably sell again, and then what do you do? Well, not no real good place to buy. And then here, you got to be thinking a lot of buying pressure, weak trend. The bulls who bought here will probably make money if they manage the trade. So, what do? Maybe they, let's say they bought at 350, or excuse me, let's say they bought at 2203.25. So in other words, they bought at 3.25. And that would be 99.25. Okay. So what I'm looking at is I'm wondering, could the Bears buy 4 points lower? And anyways, they couldn't buy 4 points lower, but they could buy 3 points lower. So, where I'm getting at is, bulls buy above, they risk, maybe they put their stop down here and they buy more, 3 points lower, pick a number. But weak trend probably will get back up to here and reward traders who bought and scaled in, or simply just bought down here. And we're holding above criticals, pretty important support. So this could still be just a deep pullback and a retest up to here, which is kind of what we did in the Globex. And then we tested up, wedge, 3 pushes down, 1, 2, 3, and sideways into the close. So, always in, if you're really determined, you buy bar 2, maybe you get out, maybe you get out of longs and look to buy again, but, or maybe you aggressive bears sell, but then they probably get out, maybe aggressive bulls buy, and then, second entry short, possible top channel, maybe, bulls definitely get out because it may be always in short, aggressive bears sell, or, bears go, always in bears go back to short, and then they got to get out somewhere down here, and, maybe bulls buy, stop down here. It's really not that simple. Always in on a day like today, you've got to really understand things shift back and forth rather quickly. And the reason for that is because the trend is, there's not really a trend. And there's swings, but it's difficult. So what's the highlight? What's the key features of today? Well, first and foremost is when you get a parabolic move, very often you get an endless pullback and then you get a clear, I didn't mean to put the mouse there. I didn't mean to do that, but you get a parabolic move up and then you get a pullback and then you get a clear breakout, like this. Something that looks like, this bar. We never got that. We had attempts, a breakout attempt, another breakout attempt, another breakout attempt. But why the big tails? Why the bad follow through? So it's really never that clear. And which makes it really difficult because you get the whole, well, there's an obvious stop for the bulls, and until we fall below it, it's possibly still always in long. But, here's the issue with the day like today. It's okay to buy up here, stop down here, and not get out until you see the bear breakout. But then again, if you're going to do that, it's better to scale in. Otherwise, I think it's much wiser to, if you're buying up in here, maybe get out, take the loss, look to possibly sell below here, and maybe get out of shorts and look to buy somewhere in here. But again, look, even if you did that, you basically break even on the day. And another thing Al mentioned, usually the market will, trading range days, usually the market will let you out. So, arguably it became always in the short here for some bears, for some traders, and other traders still thought, they said, gee, it's probably still always in long. I'll keep my stop down here. And you can see if they scaled in lower, price came right back to this area. So if you think about it, the bulls that held, bought more lower, price let them out, they made money. You also have bulls who, pick a bar. Maybe they buy this close, they don't get out here, they say, darn, should have gotten out there when I had a chance. And, what do? They, do they buy above here? They might, but I think the reality is that's not a good buy. You know, tight channel, first selection fail, probably will get 2 legs down. So here, I think it's an obvious buy above. So, you know, pick a bar. Maybe they buy here, maybe they buy here. Doesn't really matter. But price let them out of break even. But you can see it took until the last. You know, I don't know if you can see. I don't know if you can. Let's see here. Yeah, here we go. You can see literally on the last minute of the day, for the day session, price ticked above it. And, you know, it took well into the 4th minute of the final bar for these bulls to get out break even. So, not really a fascinating, you know, it is a fascinating day, but really not a fantastic swing trading day. It's a limit order day. You know, bulls that buy lower, buy more, you know, they get out, or they buy below, buy more lower, get out, sell above bars, sell above this high, sell this close. You know, really, if you take away these consecutive bull bars, it's trading range, you know, and that's really the highlight of the Emini on December the 5th. Let's look at real quick. Euro had an interesting day. Fascinating rally, you know, but it's very, you know, it's climactic, buy climax, another buy climax, another buy climax, another buy climax. And, you know, but look at the daily chart. So I believe, let me look real quick and just double check. 7. Nope. Interesting. So it looks like we held below the December. We held above the December 15th. I'm sorry. It looks like we held above. Let me just start over. Sorry, I just have to catch my breath for a minute. It looks like we held above the 2015 low on the sell-off, and we're bouncing back up. So the bull's trying to get a double bottom. You know, but here's the issue. You know, okay, let's put it this way for the month chart. So you have a logical stop up here, and I know what you're thinking. You're saying, gee, that's crazy. That's a very far stop away, and it is. So, you know, but I think that's the obvious stop. You know, maybe some bears put it up here, but regardless, it's a lot of risk. And, you know, I get it. It's a monthly chart. That's years, you know, that you'd be sitting in this trade for many, many years if you sold down here. But I think, you know, that's how people trade. So let's look here. 1, 2, 3, 4, 5, 6, 7. You know, we've been going sideways for well over 20 bars, and you have to ask yourself, at what point at some point, this bear flag, the odds, you know, maybe here the odds favored more down. But with each bar that gets added sideways, the probability gets less and less. And, you know, what was a high probability of getting a measured move down in this trading range becomes more of, I can do this right, becomes more of something like this. Becomes more of something like this, where we have a flag, you can call it a bear flag, where maybe we break to the downside and turn up, but, you know, regardless, we're probably going to get a measured move up one way or the other. And, you know, I think we have an obvious gap here, and guess what? It's probably going to close. So, you know, tough call. Strong enough breakout, probably at least a little more down, but, you know, let's see what this month closes as. Daily chart, consecutive sell climaxes, but lots of pullbacks on the way down, so, you know, we didn't really get any consecutive strong bear bars in a row. And, you know, usually price goes down too far, it gets climactic, starts to go sideways. Maybe we had a low too short. But in any sense, bears saw it as climactic. They needed to stop us very far away. And at some point, the odds start to favor 50-50 and even gravitate towards the upside. And you can see as soon as we fell below, bulls bought it. So pretty big day. Gold, I'm going to talk about 5 minutes. I just really don't want to run out of time somewhat. Oh well, I haven't looked at gold today. I looked at it overnight, but I remember that's interesting. So in my prior video to this, just whatever video I uploaded before this one, I talked about gold and I talked about this sell-off, 3 pushes down, and we tried to close this gap, and I think I thought we did, and I guess we did not. 79.8, we did not. So theoretically this gap's open and we've touched it, so it's really not much of a measuring gap because, well, it is. Okay, I take that back. So it ended up being a measuring gap, but here's the problem. Look what happened. Immediately fell below it, went further down. So it's probably some sort of leg 1, leg 2. Maybe it's kind of far away. But, and I don't really know. Clearly, let me do this a few ways. So, okay, so leg 1 started here. Maybe it's, leg 2 ended here. And you can see you had some bulls that thought it stopped here, some thought it stopped here. And we broke strongly below it. So maybe then also you want to look at this. Anyways, sideways for a long time, broke strongly below. We rallied, but that's the thing. So there we go. Okay, kind of had to just collect my thoughts for a quick minute. So basically, ignore, if you understood what I was talking about with the whole measure moves and whatnot, and leg 1, leg 2 is fantastic. If not, don't really worry about it. Don't stress over that. Let's focus on something more easier to think about in this present moment. So what happened over here? Well, clearly, probably always in long over here, a lot of bears will get out. And frankly, because the bears know the stop's far away, and the bulls probably will get a few legs up, so why hold short if you know the bulls are going to get a few legs up and price is probably going to go higher? Bulls buy, bears get out, and eventually the bulls have had a lot of chances to get up to this high, and astute traders, smart bears, even though both bulls and bears are smart, they're going to notice that this gap's holding and we're not getting above it, so they start to think about, maybe we have trapped bears, maybe we'll get a measurement gap down, and so probably over here always in long. But you've got to be think about, this is why 50-50, so 50% probabilities work. So here is the stop for the bulls, bears is up here, the stop for the bulls is down here. And I get it, you could argue that it's here, but this to me looks like a trading range and not a strong up move. So think about it. There's no consecutive bull bars, weak bars, weak follow through. So if I sell, what are the odds? Let me think how to state this. If I sell and put my stop up here, okay, let me start over. If I had to pick between buying at the market, putting a stop down here and a target here, and selling at the market, putting a stop up here and a target down here, which one seems higher probability? If you pause and think about that for a minute, I think you would say it's shorting, and the reason why is the bulls have had a long time to prove that they can do it, and that they can regain control, and they are not doing it. So we're probably going to have to test down here. I talk about 50% pullbacks in other videos, and I'll talk about it more, but it's not a Fibonacci number. It's simply, it's one-to-one risk reward. It has everything to do with risk reward and probability. It's it's just an equal risk for reward, and actually the bears have better risk and probably higher probability selling up here. But if you don't want to take that trade, at this point you've got to ask, has the market changed? I think it has. When's the last time we've gotten consecutive bars? Well, yes, but really with not really anything big. We got a strong breakout here, and we held above it, we held below it, another breakout here, so it looks like the mid-back's always in short, probably a second leg down, so bears will sell, stop up here, clearly always in short, probably stop now up here, maybe up here, but we're testing the bottom, bars getting bigger, probably a second leg down, but again, bottom of a trading range, I think it's okay to take profits and look to sell higher, because that's probably what's going to happen. But at the same time, on a side note, it's a micro channel, very tight. First left should fail, and so it's okay to hold above. There's no rush to buy. And well, before I go forward, let me just kind of okay. So I said it's okay for bears to get out, which I certainly think that, and it kind of depends on how aggressive you are. If you understand this channel is really tight and that the pullbacks are small, then a lot of traders will look to sell again. Maybe a double top. It doesn't matter. Maybe you say, okay, 2 bull bars, I'll sell. Maybe stop up here. Price is going to have to go sideways for a while, but that's hard to do. And we just keep going down. So, or maybe you sell this close, but I know you're thinking, gee, that's an exhaustion gap though. And what if price races up? Well, it's probably not going to race up, and you're probably going to get a second leg down. But so this bad follow through is a warning that this may be exhaustion, and we may. Sorry, I want to. No, here I'm about to redo it, and that we may get something like, you probably won't get this. So anyways, if I did hold short, I would definitely, which I would try to hold short, because if you think about it, here's 1:35 a.m. That's what it looks like on a 15-minute chart. So anyways, clearly sold off strongly. Always in bulls, they get out above here. Below here if they understand what's going on. Bears had multiple attempts to rally up, and they got above this high but failed to get above this high. Stop for the bears. Theoretically, up here, most traders would never do that, but they understand the logic. The bull's been trying to push up. A lot of bear. That's why. At some point, think about it. When you have a bear flag, the bulls want to break out of the bull flag and the measure move up. And I don't get that far, but they keep trying. Try it here again. 1, 2, bull breakout. Doesn't matter. The bulls keep trying, and they keep failing. Eventually, those bulls will give up, and the bears start selling aggressively. The bears will say. Here's kind of the logic for the bears. The bears are going to say, if I sell, theoretically, they may say something along the lines of, if I sell below and put my stop up here, I'll probably make a 1-to-1 before I lose a 1-to-1. Or, they may say, low close is here. Maybe I if I sell and put my stop up here and put the target down here, I'll probably make money before I lose money. Other traders are going to say, nah, I'll wait for a breakout. Here, breakout followed through, and they say, okay, clearly always in short, I'll sell, stop up here. And, this is certainly a problem for those bears. So, for the bears that did that, maybe they get out of longs. They probably got to get out of shorts. Once you get 3 bars up, 4 bars up, probably back to always in long, and better to wait. Do you buy? It's tough to buy after this many bull bars, but I think it's back to always in long, and that was just a pullback. And now we're getting, it's getting confusing. So I don't know. I think that at this current moment, I'm thinking strong enough sell-off or probably a second leg down. The bulls, maybe this is just 50% pullback. A lot of times, if you want to see who's in control, look at 50% pullbacks. So we got to 50% on this bear leg. Bulls immediately sold. 50% on this rally. Bulls bought it. So I think we're kind of fairly close to 50-50. Maybe, I don't know. Maybe I'd say short below here, stop up here. I don't really know though. I'm not of a strong opinion. So I guess if I had to pick anything, I would sell below here. The bulls seem to take profits up here. The sell-off was kind of weak. So sell below, stop up here. Clearly always in short, probably at least a small second leg down. But I think bulls will make money. And I went too fast. I want to point something out. Very often when you get sell climaxes, and what looks like exhaustion, a lot of times you get something like this where, the odds favor a second leg down, and you get a pause bar and another leg down. On a small time frame, that is a second leg, so it's a micro double bottom, down, up, down, up. So, think about it just in simple risk reward. If I put my stop here and I sell here, stop up here, my target's way down here, I probably won't get that target. So I think a lot of always in bears get out aggressive, bulls buy, or they wait for this. That's a give up bar, and they buy a stop down here. You can also see you have a lot of bulls that are trapped. So bulls, they buy this close at 60.03. I'm sorry, let me make sure that's right. Yeah, they buy, disappointed. The smart ones got out, but the others were trapped. And before I go further, you do have bears that will sell this close, scaling up here, look to get out at 50%, but when this turned up, they're trapped. So aggressive bulls are buying, and that's what you have to realize. Second entry short, we're at the minimum target, but tight enough channel, probably first band will fail, so I think you can hold wide stop. Clearly always in long. The bears lost control. But again, stops far away. Buy climax, another buy climax, another buy climaxes. So I think it's okay to get out and look to buy lower. I think we're in a trading range. We're at resistance, 6-minute moving average. So there's no rush to get long, but I think it's perfectly fine to be long. I would certainly, at a minimum, stop down here, probably here. I'd prefer it here. I would never put a stop down here. If I was going to put a stop down here, I'd get out of the market. Sorry, let me just get a sip of something to drink here. Just need a little water real quick. So, again, I think the bulls will have to go sideways the bears will have to go sideways for a while, but, this looks like a trading range. And, breakout, but that follow through. So look at this rally. when we look at it, it doesn't look that strong. Maybe a second leg up, broke by the 6-minute moving average, so may go a little higher. These rallies are tricky because measuring gap here, and look what happened. We're rallying up. So it's always, these kind of rallies are always interesting, man, because they seem difficult. And one thing that makes them difficult, well, they always look, I don't want to use the word difficult because I don't like using that. They seem confusing, but think about what's going on. The bears are trying to get bear flags, so you get a breakout, bad follow through, breakout, bad follow through, and you go, maybe it's second or short. Then you get another breakout. Then we try to top again, and then you say, maybe it's a, channel up. We'll probably, bull channel, bear breakout. So bull channel, bear flag. And then we get another breakout. It's consecutive buy climaxes. So that's one that, that's why it's important to see, when are the bears making money? How easy is it for the bears to make money? Well, they made money here, didn't here. So it's really, okay, so let's say it sold this high, 69.1. They couldn't scale in. And they could have made a 1-point scalp, but they can't make money on stops. Second, look at 11 o'clock on the 15-minute chart. Consecutive bull bars. So that's why I think it's better for a swing trader to try to use a stop down here. Maybe down here. But, consecutive buy climaxes will probably go sideways for a while, but we ended up just going higher. Bad follow through, but instead of the bears taking profits, or instead of bulls taking profits at the close, bulls bought more. And now we're getting really parabolic and climactic, so I would look to take profits. I certainly would get out below here. I think it's always in short here. Here, clearly always in short, stop up here. A lot of times that happens where, when you get a reasonable bar to buy, you buy this bar, and that's interesting. You get a reasonable bar to buy, and usually there's a way to manage your trade if you do it correctly. The worst thing you can do is put a stop below this bar. It's exhaustion. We may fall 72.2. We may fall one tick below, which we did here, and that would be number one. The bulls buying up here and are holding their stops down here, and they're disappointed. So they're saying, you know what? I bought up here. I'm gonna add on down here. If I'm really smart, I'll try and buy this low. But anyways, regardless, they get out break even, strong enough for second leg down, but bad follow through. But this doesn't. I would never buy above that and put my stop down here. So we're probably going a little lower. But here, what do you do? Well, I still think, if you're short, probably stop up here. I still think we'd get a lower high. So if a bull bought above, if aggressive bulls bought, or if bears got out, they get short again because we're probably still always in short. And, we really need to break out to the downside. The longer we stall, the more this makes me think, okay, consecutive buy climaxes, 10 bars, 2 legs. Well, we clearly had 10 bars and 2 legs. If the bulls keep failing, if the bears keep failing, swing bulls are going to start buying again. So, I really want to see a bear breakout. Finally, we got it. So this tells me that the bulls are probably failing. Maybe we'll get down to here, but before we look at the next bar, bears need a breakout, and if they don't get their breakout, they have a breakout, but I'd rather it look like this. Why can't it look like this? So, I'm not convinced yet, and there we go. So again, making it difficult. Maybe always in bears get out above, tight channels, the first love should fail. Another bear breakout, bad follow through. Another bear breakout. Well, I know you can see the bar, but you know what I'm going to say. Where's this? We're not getting this. So that makes me think that the bears are, they're managing a trade. In other words, maybe they sold here. Yep. Guys, markets work on, and I say guys, I didn't mean everybody. Kind of on a side note. It's just a word I use. I'm sure, I'll say it real quick, but I think there's just as many female traders and male traders, so I think that's kind of irrelevant, but, when I use the word guys, I just mean people. So anyways, back to trading. If you do something and you do it reasonable and it makes sense and it's logical, usually you can avoid a loss. So you think back to here. And I would never recommend anyone doing this unless you're very good at trading and you have, unless you can trade very, very small. And when I mean very small, I mean like you can trade whatever number you seem large, you can reduce your position 10 times. I'll put it that way. Possible bear flag, bear breakout. So maybe a lot of bears will sell this high and they'll say, darn, I made a mistake. Maybe I can, I'll try and get out of break even. Well, and they say, if it keeps going, I'll use an incredibly wide stop, maybe a stop and measure move up, and I'll look to sell in a bear. I'll look to sell, some stop entry down. Well, here maybe, but then again, a lot of bull bars. It's a micro channel. This looks climactic, so I'll start looking to sell up here. I'll sell below this bear bar. So I'm disappointed. I'm going to try to get out of break even. Here's break even. And it looks like a lot of bears are trying to get out at break even. So are we back to always in long? I don't know. I definitely think bears should get out. Do bulls buy? They can, but again, the bulls need a breakout. This looks like a trading range. The bulls are clearly disappointed. We may get leg 1, pull back leg 2. So I'd be leery of buying up here. And clearly we're in the, the kind of the small range part. The New York Stock Exchange just closed. And here we are into now. And you can see what happened. We rallied back up. Okay. This video is getting way longer than I intended it to be. But it's fun for me to do this. So I'll briefly look at a little more. Here is, gold had this is crude oil. Pretty big rally. I have no idea why. By the way, on the euro, something Al talks about, I kind of find interesting. I forgot that if you go to just Google Italy, Italy's having a referendum, and I guess they're kind of doing what Great Britain and kind of doing what the UK's excuse me, just kind of got to catch my breath for a second, but they're having a referendum similar to what the UK had back in the end of June, and I guess they're working on it. But rumor had it that Italy was thinking about leaving the European Union, and to me it's kind of interesting how. And this is completely what Al said, so I'm just kind of stating what Al said. I'm giving Al full credit for this, but it makes perfect sense. And so I'll kind of restate it. But again, this is what Al said. Al was talking about, you got to think about why is the EU rallying when you have Italy threatening to leave the EU and the EU gains in value? So it's kind of like as Al put it, it's a slap in the face for Italy. If you were threatening to leave and the market perceived something as valuable because you're threatening to leave or increase in value, that means the market sort of wants you to leave. And again, I don't know. I clearly don't know enough on that I don't know enough on that subject with what else going on in Italy to feel credited enough to say that. I'm just saying kind of what Al said, and the chart sort of shows that, so it's just kind of interesting. But again, like I said earlier, big sell climax, sideways, probably going to close these gaps. Bulls will probably make money. That's all I care about. I don't care why. That's just logic to me. This makes the most sense. The chart makes the most sense. So that's what I'd pay attention to. But anyways, back to crude oil. Whoa, okay. Last thing I will talk about. What chart was it? On a 15-minute chart? Sorry. Oh, okay. Just kind of got confused where I was. So, we've been rallying up, always in long. Maybe on the open, are we always in the short? Yeah, we probably are, but look to the left. We're in the trading range. I'll zoom in. There we go. We're in a trading range, and great bar 1, great bar 2, bad follow through bar 3. This doesn't look that impressive. Price went exactly 20 cents lower or 20 ticks lower. So, you have trap bears in a sense. But I do think the first level will fail. Will it fail still? I think it will. I think stops up here. Second entry short, make it a small leg up. So if I had to say, I would say always in short, but I'm certainly disappointed. But, bad follow through. So probably okay. Maybe trap bulls. And we're selling off. But again, maybe always in long. So for the bulls, always in long, stop down here. And if we don't break below here, we'll break out to the upside. So basically we're in breakout mode. This signal bar looks better. The risk is big, but it looks better. Closed on its low, not as great here, so we may be channeling down more bear bars in here than bull bars, but it looks like a trading range. So I think it's certainly okay to get out of shorts. If you go long, maybe, but I need a bull breakout. Otherwise, I really wouldn't want to. I'd be nervous about holding long because I think we'll get a downside breakout. We're getting it. We broke below here. We're trying to break below here, but why the tail? Why the bad follow through? Finally broke below. Followed through good. Clearly always in short. I don't think we ever really went always in long here. I think that number one, it's a deep pullback, but first left should fail. So, never easy. This is the problem with buying at the moving average on any market. You sell the moving average here, sell the moving average here. Say breakout, sell the moving average. But until you break above the moving average or below the moving average, it's probably a trap. And you have bears who will sell, stop up here for a scalp, sell, stop up here for a scalp. So, kind of pay attention to that. In other words, look at 50% pullback. So bears sold 50%, price came down here, 50% rally, bulls bought, but in other words, what I'm saying is can traders make money on 50%? And if you think about it, the logic on that is if you buy right here 50%, stop up here, target up here, you didn't make money. If you sold 50% up here, stop up here, target down here, 1-to-1 risk reward. If there's an obvious one to take, it might show there's 60%. And okay, so clearly always in short, stop up here. Again, like I said, minor reversal unless the bulls break out above. Any bear that gets out and any aggressive bull that buys, if we fail to break out above, they're going to get out and go short again. So, but if there is nothing wrong with waiting to sell down here, now again, not a strong breakout, and I'd rather, I would like to see a bigger breakout. So again, stop up here. I think the first up will fail, but we could easily get a deep pullback. And then this, I'm not happy about it. I think it's okay to hold short, but again, you got to ask why. Bad follow through, selling off, bad follow through. So now we're getting bad follow through, and that's a problem. Looks like a leg in a trading range. Do always when bears get out above, maybe. I think it's okay to tight enough channel first up will fail. I wouldn't buy above. And I don't know. That's a tough call, but starting to get a tight channel, and it becomes difficult. It's hard to tell. We've been going sideways for such a long time that the probability for reaching here before reaching here is probably, if it's not 50%, it's very close to 50%. So I don't know. I think it's tough to hold short or be long. I don't know. Guess if I had to pick anything, I'd pick always in short, thinking that we'll have to retest down here. But it's not that simple. And clearly I was wrong. Bulls got their breakout. So that's kind of the thing. It's really, it's not great math to be holding right here. And triangle, 50-50 chance to get a bear breakout, then a bull breakout, or the first breakout fails. But bad follow through, maybe the stop's up here. So trying to rally, but not really getting anywhere. 3 bear bars, good for the bears. Now I'm thinking, well, maybe we weren't always in long here. Maybe this was 2 legs up and the stop is up here. So if it was, maybe it was just 50% pullback. And maybe, this was the right direction and this was the failure. Or in other words, tight trading range, 50-50 chance you break out in the wrong direction in reverse. But I think the fact's always in short, but why the bad follow through? But strong enough for a second leg down. And okay, I'm gonna stop right there and kind of speed up because that's just okay. There's small bars. It's midnight and at that time, so let's go to something more fun to look at. Clearly always in long. Maybe this was trend line break, sideways, final flag. Always in long, follow through. Clearly always in long, stop down here. Rallying, so biclimax, another biclimax. Sideways, another biclimax. So maybe parabolic. I think a lot of swing bulls will get out and look to buy, for 10 bars, 2 legs, especially after that. I think it's okay to sell. I don't know, I'd rather see 3 bars before I sell. And that's why. Always enticing to sell, but hard to, it's just, you gotta be careful with that. I think always in bulls get out. And do the bears sell? I think they can, but I'd rather see a bear breakout. But I think it's always in short, temporarily. And I'd get out of shorts about that. Probably always in short. Looks like a report. But until there's a breakout, there is no breakout. So more sideways, and here clearly always in short, just sell, stop up here. First left should fail. Not really. Now kind of a sideways sort of triangle. Problem for both sides. I'd get out. I was about to say I'd get out above here. We retested the lows. We've been trying sideways for too many bars. Clearly, probably back to always in long, but hard to say. And the reason for that is breakout but bad follow through, then sell off. I'll talk more about that later. Okay. Clearly, always in short wedge, but probably second leg down likely. And very disappointing. So that's kind of that. Consecutive sell climaxes, tested this low, found buyers. So maybe we'll pull back. But strong enough breakout a little more down. Okay, I'm done with this for now. I've got some other things I need to do anyway. So I hope this helps. Comment below if you have any questions. That's sort of how I look at always in. Like I said, did that kind of fast. It's a lot of bars to think about. So, that's kind of some insights on how I think about always in. Alright, please comment below if you have any questions, and thanks.